Good morning, ladies and gents. Frank Flegg here, founder of Ethical Property Partners. This morning I'm going to be speaking to you about the reintroduction and the growth of the 90% residential homeowner mortgage market. Now, in spring, March, April time, when COVID-19 was kicking off, these products got pulled almost entirely off the shelf. In fact, NatWest took their products away. Anything above 80% disappeared in April time. That is now changing. Recently, we've had announcements from Halifax, the Yorkshire Building Society, NatWest themselves, all piling back into the market with their 90% offerings. Now, for the last few months, I've been predicting this perfect storm of events that is going to lead to house prices dropping. But this is an example of how external influences can prop up the buy-to-let mortgage market. Now, logically, on a macroeconomic scale, house prices should drop next year, but there's no guarantee of that. And so 90% first-time buyer mortgages, 90% residential mortgages will help to bolster the market, because people who've been living with their parents this year, etc., who desperately want their own place, will now be able to. The difference between an 80% mortgage and a 90% mortgage, it sounds like 10%, doesn't it? It's not. It's 100% difference in the buyer's deposit sum. So on a £200,000 property, at 80% they need a £40,000 deposit, but at 90% they only need a £20,000 deposit. So the number of people that can buy at those higher levels, those quite inflated levels, we're at the highest property price point that we've ever had in the history of the UK right now. The number of people that should be able to buy should be diminishing, but when mortgage lenders, because let's face it, they're a business. They have to lend money to make money. And so they're now getting all competitive and trying to get into this 90% part of the market. Perhaps we'll even see 95% loan to value residential mortgages coming up. Don't confuse this with buy-to-let. Buy-to-let mortgages are only available at I reckon 75% is what you should rely on. Some of my clients are getting 80%, but if you expect 75%, then you're rock solid. So what other factors could influence either the drop that I'm expecting not happening or it being delayed? Well, we've had an announcement quite recently. Furlough was due to end on the 31st of March. That's now been pushed back to the 31st of April. There is nothing that will do, in my humble opinion, other than kick the can down the road by a month. But it does kick it down the road. And so if you're sat there as a buy-to-let investor and you're trying to time the market, and this is where my advice has stayed constant. I always say that you can make predictions, but who knows what external influences are gonna affect that. However, what I always say is, it's not my saying, it's the Chinese saying, best time to plant a tree was 20 years ago, second best time to plant a tree is today. And so if you're sat here thinking, well, I'm going to wait till April, May when prices are softer, you might be waiting a year, you might be waiting 2 years, you might be waiting a decade. And then, of course, prices are never going to be as cheap as they are today. And so you could just miss the market. So we've got furlough being extended. We've got Boris announcing Generation Buy, his 95% initiative for people to buy, whether or not that actually comes into legislation and happens. But it shows that there's a high likelihood of the housing market being artificially bolstered, artificially inflated beyond what we've seen in 2020. And that therein lies the potential problem that there's a lot of money that's being made, a lot of money that the government's making from house transactions, from people moving house, buying houses. They very effectively, this is not a political statement, but I think the facts are there for all to see. The government very effectively bolstered the property market last year. They pushed the number of buyers that wanted to buy through the roof by taking away stamp duty. Now that's due to end on the 31st of March. Perhaps that will also be extended. And if you have a few of these compounding factors taking place, then we as buy-to-let investors are quite likely to not see our property prices drop, which is good. It means we can refinance at higher levels. It means that we can sell our properties at much higher levels. I've sold more properties in 2020 than I've ever sold in a year before. And so there you have it, guys. 90% residential mortgages are becoming more common. They're becoming the norm again. Many more lenders coming into the market. Not as many as we had last year. Not as many 90% as we had this time last year, but they are certainly returning to the market, which is good news in some regards, and it definitely means you shouldn't wait. You should not try and time the market. You should get into property today rather than waiting, because who knows what's going to happen in the property market tomorrow. Guys, if you like our episodes, if you get value from them, hit the notification bell, click the subscribe button, and I will see you in our next episode. Until then, happy investing.